Traders around the globe, good morning, good afternoon, good evening. Stelios, good morning.
Hello, good morning to everybody. Hope you're having a good day.
Yes, so far so good. Nothing happened. I'm joking. Right, let's straight away get into what happened overnight. And before moving on to the RBNZ and everything, just have a quick look at what at some comments that we read. This, as far as real news in the geopolitical world or elsewhere, there's not much that really happened outside, let's call it facts. So the first thing I saw was this ex-Bank of Japan MoMA commenting on what the Bank of Japan should do. Again, they're always very vocal once they are not in the seat anymore. But anyway, he said something interesting though, and he did say that the recent global yields drop creates a favorable condition to end YCC because it would create less of a potential shock if they let the yield curve control go now, because the rest of the global yields is coming down. And it's actually an interesting take because it's not something that we were, or I was looking at anyway, because global yields coming down may seem that the Bank of Japan window is closing again if inflation comes back down, if the especially if the economic data start to turn south. But it's an interesting take, and I wouldn't completely dismiss it. It is somewhere true that if the rest of the world is not, you don't have like 3-4% differentials with or 5 even with your own rates, it would come as a lesser shock. So I thought it was a bit of an interesting comment. He also said that the Bank of Japan should not communicate too much with markets on beforehand, and he does not rule out that the first Bank of Japan meeting chaired by the new governor Ueda could already give us a decent hint, or at least some kind of move. So I thought it was pretty interesting. On the rest, it's JP Morgan Bob Diamond said that the US banking turmoil is not over and could have long repercussions. That is somewhere coming to what you were saying, right, Stelios, and saying that we can't rule out that it's all over yet.
Well, exactly. I mean, obviously, I don't know the situation firsthand, but how do situations like these usually work out? It's very rare that such an apparently serious situation gets resolved quickly, and it's been resolved apparently very quickly. I'm just not convinced yet. I hope I'm wrong, but I'm not convinced.
Okay, yeah, and then going over to what the Fed said, Mester was on the wire saying that they still have ways to go. They still have to go over 5% with their rates. That is not what the market told us after yesterday's the yields coming out, and the ISM. Where is this? The ISM was the day prior, right? Missing, and the yields were yesterday. So the traders now are actually seeing 60% or no move on the next FOMC meeting, which is early May, and 40% still pricing in a 25 BPs move. But it's clear that the market is now gradually completely abandoning the idea that the Fed will have to go much further, and we'll come to those yields data in a minute. On the other side, the option traders in the money market option traders have been selling out most of those panic options that they put on, so that has depressed the option vols a little bit in the yields sphere. but the skew in the meantime remains very much for lower yields there, higher bond prices. So that is another thing that I read overnight. What else came out? Well, there's still this ping pong going on between China and the Taiwan president, and apparently she met with hush-hush meeting with some of the US senators before even doing her other meetings. Well, that is something that we just can't overlook at any stage, whatever is going to happen on the geopolitical scene. It is tense right now, so that is something that we just can't dismiss right now. Anything can happen anytime there. I don't think the worst is to happen, but yeah, as Brian says, we can't rule out much right now there. So keep that in mind as well when you're trading, and when you're trading risk, is that this constant overhang of something less good that could happen. And the last thing, and that I found a little bit funny, is the IRS is going through with their $80 billion spending plan to improve their tech and the enforcement of tax collection. And that made me think about we're still not out of the debt ceiling issue, but yet Yellen as well has approved it apparently. So they are still pushing for spending a bit more when we don't know if the US will be able to spend more at all. I actually lost track of when this debt ceiling should be resolved. Do you have any idea still when that is to happen?
I don't, but let me ask you a question. Do you think that?
Okay, Mike, thanks.
Sorry, what? Okay, but I wanna ask a question. Do you think the debt ceiling is ever going to be a problem, an issue, an actual issue? Because for the last X years, they've just been raising it, and they will continue to do so. Do you think they're not going to do that at some point and default or not be able to borrow more?
No, but we have seen moments of tensions in the history, and we have seen, what was it, a week or so, or 2 weeks of government closing. But no, I fully agree. They are going to raise it in the end, and for the time being, it's just a bargaining discussion, right, between the reps and the Dems. But yeah, I agree with you. They will raise it. In the meantime, you know how the market likes to trade a bit of stress and a bit of uncertainty. So I think we can't rule it out.
You are right. I think there's going to be trading opportunities on the back of that before they agree to raise it and stop the theatricals.
Yeah. Okay, then. Over to the RBA. So Lowe commented finally on the RBA holding its hands still, saying that further rate hikes are possible. So that brings us back into this scenario, hold off now and then hike again later, but that is creating more uncertainty, I think, than anything else. And they want to monitor the transmission of the hikes already happened, and that already happened on, especially on households. And also saying that the recent inflation is not really driven by wage hikes. So that puts them really still firmly in the pause camp. And we'll have a look at the Aussie in a minute, but the Aussie really did not like whatever RBA did and commented upon over the past couple of days. And also saw a Fitch article coming out saying that they expect earnings pressure to return for Aussie banks from mid 2023. So not a lot of help for the Aussie in the markets right now. And then that brings us to RBNZ, 50 basis points, and saying that they could continue to hike because of the inflation being far too high, and that the labor market is still beyond the maximum sustainable level, beyond the maximum sustainable level. That created a little bit of a shock on the Kiwi. Kiwi rose versus everything. But then again, this morning on the dollar side, the Kiwi dollar lost everything of what it picked up. The biggest victim of really what happened on the RBNZ there was really the Aussie Kiwi. But that has, in retrospective, more to do with the Aussie weakness, I think, than the Kiwi strength, as we are seeing. What do you make of these Stelios? Because in over the end of the year last year, they were going all mellow and saying perhaps not too much anymore. We may be close to the end. And now, since 2023 starts, I don't know what they have eaten or what has been told or so, but they are now all guns blazing again, and one of the most hawkish central banks out there.
Yeah, I was very surprised, I have to say. You know, I think the central banks are being divided into two camps now. One camp that believe that inflation is going to continue to drive lower, and the other that thinks that it's going to be sticky. And you know, when you have energy prices going higher, you know, it's there are arguments for both sides. So I think the RBNZ are definitely on the hawkish side, clearly, and they probably think that they need to do a lot more to tame inflation. I'm torn. I still think that inflation is going to keep dropping, particularly in the US, compared to other countries. For example, compared to the UK. But you know, it's tough to you know, it's tough to have a firm opinion. It's, you know, it's the each central bank's view on how inflation is going to turn out, and frankly, there are arguments for both sides. So yeah, I don't know what to say. You know,
Yeah,
I don't know what to what to make of it.
Yeah, but
But
I've got the impression we're going, especially well, now that we are particularly talking about the RBNZ, is we are going to see more weather vane moves than really a trend. I mean, I can't really see why, unless they have a plan with the Kiwi as a currency. Unless they have a real plan with it, they're trying to take it higher to fight inflation, just a little bit like the S&P is doing. But then in the context of all the central banks globally, it's a bit of a tough one for me as well. And I reckon we are going to be more going forward, at least for the RBNZ, more in a weather vane situation. They can flip around. For the same money, they can flip around the next meeting, and so I'm quite uninspired to really start to take larger positions in the Kiwi, because we can see a bit of a yo-yo there, in my opinion, coming in the Kiwi as such. I mean, as we will see on the charts, it's already back to the 63 figure 10 break level, and if the market would believe in them, we wouldn't be on the support. We would be trading higher, right? Yeah, let's have a look at that later. Okay, moving on to what has happened. So market decided to sell dollars on the combination of two things. So that's the day before yesterday's ISM and yesterday's JOLTS report. The JOLTS came out well below 10 million. If we look at the details, and we were looking at those details a little bit in the room yesterday, it's not really, there's no shockers on the quits or leavers or people getting laid off, really. It's really the job ads that dropped severely, of what we could see anyway, and which made us think that perhaps because there's been reports out a while ago saying that those job ads are a bit of a fakey, because there's jobs in the market that just never get filled because they put the job ads out there, but just to show the government that they are looking for jobs, but actually they don't have many jobs to fill. So we were wondering if it was a little bit of a correction of the number rather than a drop. But anyway, the market took it as a combination, I think, of both, as quite negative. And we're seeing like the US yields are coming off quite rapidly. So the dollar got a little bit of a knock on the head. We have especially seen metals starting to fly. And finally, putting a cap on the equity markets. Now today, the market is relatively, how shall I say, subdued or trying to correct the dollar weakness because other yields elsewhere are coming off as well. But if you look at overall how the market is trading this, we're more or less back on the risk train. And I'm going to show you the euro crosses, for instance, and the yen crosses, and they seem to be the drivers again in this market. The dollar market as such, because we if you look at the dollar, okay, well, I'm going to say this once more. I never looked at this Dixie for 40 years, and I'm not planning to start with it. But since so many people are talking about it, it's trading at lows. But then if you look at it, it's trading, the euro dollar is trading around highs. The cable put in fresh highs. The dollar yen is putting in fresh lows. But then the rest of the spectrum is not at all showing dollar weakness. So I'm a little bit suspicious for the moves right here and now. So on the combination of those, we've seen those yields come off. We've seen risk come off. We've seen equities, perhaps too early to call it a turn, but at least capped. Stelios, give me your wisdom.
On the data and on
those, yeah, on the dollar, on
okay.
those numbers, on those.
Yes. Well, I said this yesterday on the morning edge after the numbers or during the numbers. I think we can all agree that the last bit of economic data of the US, which is still going strong, is employment. We've talked about NFPs being strong for a long time, unemployment being low, but of course the quality of employment decreasing. That doesn't matter. The market looks at headline numbers, and headline employment has been solid. That is really the last bit of data which is doing well, and the Fed has explicitly told us. Powell said that if employment starts to deteriorate, then that will be a clear signal for the Fed to pause, or something to that effect. I can't remember the exact wording, but this is something that the Fed is looking at like a hawk, and I think that's why we got this big reaction yesterday. I mean, 10.4 million expected, 9.9K come in. It's not a huge difference. Yeah, it is 500,000 difference, but it's not like a total disaster. But if this means that employment starts worsening, and of course we have day after tomorrow, we have payrolls on a US holiday, then you can bet you're behind that the Fed is going to be stopping really quickly, which is what the market's pricing anyway. Do I think the Fed's going to be cutting 75 by January? Yeah, probably not. But I think they're going to be close to cutting late this year. So the market can readjust the pace of cuts. But trust me, I think, having dealt with or traded dollars for 20 years now, and I was market making dollar swaps for quite a few years, and knowing the Fed over the years, there is no Volcker anymore. Yes, Powell is trying to be a kind of a mini Volcker, but I think he's going to be quick to reverse if situation and if conditions need a reversal, so that's why I think the market puts so much strength into that, so much importance on that number tomorrow, and that makes ADP today and Friday's NFP a whole lot more important.
Okay, I mean, Stelios, welcome to my world. I've always been saying that the jobs market is the last big domino, right? That will fall or stand. And and I completely agree with you. We are there. This brings me back to the line that Powell told in the 2021, I think, when I said, okay, this is the reversal. This is where they are going to start to hike. And the meeting afterward, he said something like, and a famous, really, it hangs with me all that time, saying like, there may be some pain to be taken. And I think we are now in that scenario. The pain to be taken is I think we are now there. And as people know, and I've always been saying like, yeah, well, be careful, be careful, be careful. I think now that we are in the zone, or at least we are entering the zone. And as you say, this week's numbers, we've always been saying that it's somewhere impossible if you to continue to print those better than expected, actually, not only meeting expectations, but we've seen many labor reports come out. They are actually better, beating expectations. So better than what actually could be expected in a normal economic development. So there will be a time where this number is going to undershoot, right? And really unfortunate. It's such an unfortunate fact that they are going to bring this out on a Good Friday. I really don't know who took this responsibility, or at least kept the report for to come out on Good Friday. And I'm not talking really about us traders as such, but I mean the Fed and even Powell, they must know that. I mean, they are looking at it, and letting it come out on a Good Friday is absolutely criminal, in my opinion.
Yeah, there's no reason to do that. I don't get it. But
no,
anyway,
they
it
could
is
have
what
waited.
it is, right?
They could have waited for like next week Tuesday or so. You know, they let Easter go by, let the markets reopen on Tuesday, and then we are going to trade it. Because if anything silly happens, and that's going to be especially on a bad report, right? If the report is better, the market is going to move, but then the Fed shouldn't be alarmed by anything. But if this report comes out much worse than the expectations, then it's going to be absolutely Armageddon. And in a market where you have perhaps, I don't know, 10 or 20% of normal liquidity. And that's where I don't agree for them to bring it out on a Good Friday. Right. So anyway, these were the numbers, and that's what we are looking at. And I also and so we are going to, yes, have to clearly monitor what's coming out on the jobs front now. So a quick look at the other data that came out. I also want to draw your attention to just in between a couple of holidays, especially for people trading Scandis, for instance. Norway is closing shop in about an hour's or so time. Yeah, that's in about an hour's time. So for those having Norwegian kroner in position, watch out, because your spreads are going to widen gradually for the rest of the week. Okay, then quickly over to the data. We saw a bit of a draw again, which should be supportive for oil, but for the time being, it's rather stabilizing on the API crude stock report. And then the PMIs. We are in, well, Aussie brought out their manufacturing PMI, but then today we're in services PMI territory. So it's a bit of a mixed bag, but on the whole, nothing really alarming. If you look at, okay, it's still below 50 and it's lower than the prior one, but we are not that far on the Aussie front. But I think the fact being below 50 on the Aussie has just accelerated or put just some more weight on the Australian dollar overnight as well. We did the RBNZ. On the rest, we've had, yeah, the German factory orders were a little bit better than expected, and we also saw that the retail sales were not too bad the other day. So I think that's also another factor keeping a little bit of a bid under the euro right now. Moving over to Spanish, the Southern European PMIs were actually pretty strong. We can call that a strong number. A number close to 60 is pretty strong in Spain. We saw the Italy services PMI beat. It's relatively good news actually for Euro if Southern Europe cooperates. So we saw a bit of a miss on the French and the German and the European data, but we have to note that the French was still higher than the prior one, and Germany was also higher than the prior one, which resulted in a in a higher than prior European services, even if it was a bit of a miss versus the flash readings and the expectations. We have to note that it's in positive territory. Similar for the sterling, which came out a bit better than expected, but there we had a pretty strong reading in February. The March number didn't reach the February data. So that's about it. A bit of Italian retail sales. I don't know whether they're adjusted or not, but they haven't been a market mover. So what's on the docket for today? Those watching Mexican peso, we have the March CPI coming out a little bit later. So careful for that.
Don't you, sorry to interrupt, don't you love that Mexico report to 2 decimal places?
Yeah. Funny, right?
I love that.
And even on their half monthly, they really got drilled down to there. And I don't know really why they are doing it, because at those lofty levels of inflation, does it really matter when it's whether it's 0.01% of expectations or so. But it's it's a funny one. So that brings us into the ADP report that we have said. ADP is at best a bit of a lottery, but it has also been pretty consistent of late. We've had, if you look at it, it's been we've had this, what is this? Oh, it's just no. This is the wrong one, definitely. Why do we? So yeah, if you look at the latest numbers, it's been consistent around the creation between 100 and 250K. So it will be a mover, because we are in Easter week, and people will look at all employment data and react upon it, as we've seen on the back of those yields as well. So yeah, we have to keep an eye on it. We also have the ISM services coming out later, and the S&P Global services as well. So that's going to be another mover. And that's what on the docket for today. So tomorrow, then we're gonna have another point of measurement for the employment market, with the weekly claims and the challenger job cuts. So it's a big week for the job market in the US, and then it's going to be crowned with the rotten cherry on Friday, of course. So that's so ISM is really, could be really a mover as well. But I do think, and I guess Stelios agrees, that this week is really one where the labor market is going to be monitored very closely in the United States.
I agree, and yesterday's number has made every print a lot more important now.
Yeah, absolutely.
So yeah,
absolutely, mate. Absolutely. All right, so that for the upcoming data. So as I said, keep an eye on the calendar as well. So sorry, so from tomorrow, Scandinavia is really off, and then on Friday, of course, we have 3/4 of the market gone. It's actually so silly, it makes me laugh, but it's not funny at all, really.
By the way, the calendar is wrong. Greek Good Friday is not this Friday; it's next week.
Oh,
they have it there. It's I don't know why they have it like that. It's next week, but anyway,
for
anyone who cares.
Yeah, but this calendar here, we're using it because it's easy and it's free for everybody to look at. So it's very easy to use on shows, because then everybody can have a look at it for their own. But I agree, it's not the ideal page. Let's
95% of the stuff is fine, you know.
Absolutely.
And we do have it built into our platform as well, the ForexAnalytix platform on our calendar tab, which is nice. So you have everything in one place. But yeah, pretty much everybody looks at this calendar, so it's good to show that. Cayman is not Greek, no. K is but you're Belgian, aren't you?
I am.
Yeah, there you go.
I am. But I haven't.
My best friend, he's Greek. He lives and works in Ghent.
Oh, alrighty. Oh,
Yeah,
good.
yeah,
In
yeah.
the Flemish part of Belgium. But I
Yes.
haven't lived in Belgium for nearly 30 years now. I moved out in 90.
Cayman is Martian. Yeah, Brand. I
Yeah.
think you're right. Marvin the Martian. Oh man.
All right. I'll take that as a joke, Brand. Be careful, man. I'm gonna kick you. Right. Let's keep an eye on what's happened then after the latest moves. Seeing on Monday already, we didn't, the market already was starting to be a bit nervous, and this is the US 10s. And that's what happened then after Tuesday on the, yesterday was the yields. Oh yeah, oh, we were only Wednesday, right? So Monday was this, started on Monday after the ISM manufacturing, and then got another hit yesterday after those yields. We are getting into a zone, bit of a danger zone here, right? So assuming, well, if we get weak labor data, this should really be in danger. And then you are going to see stuff like, I guess, especially dollar yen, but I would also put the euro in that basket. Those two, I think, are going to be, and perhaps the Swiss, going to be currencies to really watch closely. Also watch then the metals. I guess metals are really going to ramp if we get a lower labor report. But I will come back on those metals because I think we have to make the distinction, sorry, between gold and silver in that case. So keep a close eye on that. If ever we are going to get better reports again, watch what's happening. I wouldn't say 340. 340 is a bit of a passage, you know, just a tube station. But what happens around 3.5? Anything in this 3.5, 350, 355 zone, if that goes again, and the market means that the market is or has to reprice again once more rate expectations, and we are going to see exactly the same thing happening on the 2-year, because those are the 2 years for new people in the market are really the yields that the market is the closest watching for what the final targets or so forth for the, or what actual FOMC moves maybe. Because if you go shorter, we could argue that the shorter you go, the closer it should be towards FOMC targets. But there's a lot of funding going on in those shorter terms, and I guess Stelios can confirm that, having been a dollar market maker. But the 2 years is really where the market really focuses on in expected moves. So we can't see beyond this one, since we have been back sub 4%. It's looking sluggish, right? And I guess if those labor reports come out worse than expected, this could get a real knock on the head again, and then we'll have to see what happens in the 3.5 zone. Get back above 4%, and then 410, 405. Then I think we are at the same as I said for the 10 years. We will be back in repricing territory, and then we could push again higher. Would you agree on this analysis, Stel?
Yeah, I'd first like to say that you're absolutely right. I used to trade 0 to 2 years. That's purely driven by rate expectations. Anything from 10 years out, even 5, but 10 years out is just completely flow, and the rest is kind of a mixture. So you're absolutely right in terms of
yeah.
Yep.
It's perhaps a little too deep to talk about that now, but the belly is very much used by speculators, right? They trade one against the others.
Exactly.
There's a lot of speculation going on in there, right?
There's a lot of speculation, a lot of forwards being priced. So 1 year, 4-year forward, 1 year, 6-year forward, 2-year, 5-year forward, all these forwards and butterflies. I don't want to get too technical, but that's driven massively by flow, and you can see because you can really leverage on those trades. Just a small kind of inconsistency, or if you plot the yield.
Are we losing you, Stel? I think we have lost Stelios there for a little while. Still, just let us know when you're back online, okay? And then Stelios can finish about his rates comment. Let me just try to find out if he's lost the line or sorry about that. Come on. I don't see any comment. Right. Let's move on to other stuff then. As I was saying, the gold has really spiked higher. We are now above 2000 again. This is really when the shit hits the fan elsewhere. This is really a big mover. It has traditionally been, and it's going to continue to be one. So we have to keep an eye on what's happening around 2000.
Hey, sorry, my internet just went down. I switched to my mobile phone.
Oh, okay.
Sorry, I don't know what you where I got cut off because I was speaking and suddenly I realized.
Yeah, you got cut off by when you were talking about flows in the belly and and the 14253 and everything.
Okay.
There's a lot of speculation in there and people doing a lot of swaps and forwards and stuff.
So I'm just going to leave it at that for that point. I don't want to get too technical, but the other thing I wanted to say about yields themselves, 10-year yields US, we are at, like you correctly said, very close to a major support zone, and this really has to hold. If it doesn't hold, that will mean for me that jobs on Friday or before, but most likely on Friday, had been poor. And that will mean that then the Fed is really expected to. How much more can they price for cuts? I don't know, but the market's going to probably move a few more hikes into what's projected. And really, if we break these lows here at 328 or 29, whatever that is, I think the next level is somewhere between 250 and 275. That's where I think next big support is.
Yeah, they're going to confirm it's sub 320, right?
Yes.
Where we are here, confirm it's there. It's going to be pain, and I think if that happens, then gold is going to probably go to retest the prior highs. We've got those two highs around 2075, 2070. That's probably going to be your next target if that happens, and then sorry, and then I would like to make, because silver has been on a tear as well. And both Stelios and I, we had let some go of our longs because we had to respect this channel. It's breaking out. I also rebought just because of the technical nature of this. Also rebought just what I sold the day before. So I'm not really ramping it up because I have one thing that I want to be cautious about. If economic data deteriorate, I think gold should outperform silver somewhere. But the thing is, silver can still go because of liquidity. Gold is a much bigger market than the silver in volume. So silver could still go, but I will be a little bit more cautious on this one. I want to see economic data actually deteriorate, but not completely fall out of bed. Okay, that for
just one thing to note. Sorry. Okay, silver. I remember I was saying I want to see a daily close above 2460 something, and that was my trigger. And I did get long a little bit more this morning, 2499. So this position, though, I still have my position from 2150. Okay, that I'm keeping. This position, I'm going to put a stop below the breakout. So if we reach something like 2455, I'm letting it go and just going to run the other position. But I think everything is aligning now for a move higher. Will there be a retracement? Potentially, especially if NFP is good on Friday. I think we might hit my stop at 2455. But I said to myself, this is how I'm going to trade it, and I'm sticking to my plan. You know, if this trade doesn't work out, it's okay. It's not a huge loss. Still running the other one, and remember I banked half of the other position, which was very nice.
Very nice. We've been trading it relatively similar, right? I did the same morning, updated the trades room as well, and if the break fails, I'm gone as well. So that's going to be cheap tryout, let's put it that way. But if we confirm the break, it's probably going to go back ultimately to the Reddit highs here. Little Kitty, or what's his name again? Roaring Kitty. The
Roaring Kitty. Yeah.
High at $30. I think if the break is confirmed, we could easily go up there. All right, a quick look at the majors. Euro dollar is a bit of we're trying, and for as long as we're above initially 109.30, it could be a good enough try to move higher. But then I'm having a little bit of an issue, and the daily is going to be cleaner. I'm having a little bit of an issue with this one here, the 2022, where we started from, and this early 2022, when we saw the acceleration in rate hikes as well. We saw this little congestion here, moved back up to 122, and then we went for the lows. And that trend line comes in around 109.34 or 50 right now, and I'm having a little bit of an issue with that one right now. So I don't have any euro position. It's a bit of a flip the coin here, but if we hold above 109, I'd love to see a retest and hold it to make sure of this move. Let's put it that way. Then I think we're back to the prior highs. It points at it. I'd say with the what we've seen on the US data and the European data, as I was showing the German data as well, doing a little bit better. Also the expectations for the ECB. I'd say we could go, but it's going to be, do we hold 109 or not, in my opinion. If we get a close below, and especially again on Friday above or below, I think that's going to be determining for the rest of the move. Cable, I've got a little leftover of what I bought. People know that I've been buying it since this rebound started. It started basically. Carried it through this break yesterday. Took a fair bit off around 125. It's struggling with this trend line, but again, it's a bit like silver. It's going to be an easy break to monitor. 124.40.50. Hold or fold the last bit for my position, at least right now in the short term, and then moving on to the lottery on Friday. It's pretty clean, I would say. If this fails, then I think there's a fair chance we're getting back into mid-low 124s. Why not retest this little line here? To me, I'm still watching for the viability of the whole move. I'm still watching what's going to happen around 122.60.70. 122.60.70 for me is the level where of strength or weakness of the cable in the upcoming days or week. That's my level. If it holds, or if you even hold this break, then I think we are up into the 126s, and we'll be in for a retest of this trend line, in my opinion, somewhere around 127.5, 127.75. That is possible. It's cable as well, right? We have seen 200 or 300 points in 250, 240 points in 2 sessions from where we are at 250 points, and we are at 127, right? So it is in the possibilities for the cable. Yen pairs suffered. We've had those 2 days of I'd say indecision, people not knowing, myself included, what will happen or what's happening in the new fiscal year. But I think those US data have pulled the yen traders over the edge. Dollar yen let go of this 132, 20, 40, 20, 50 support, and we are trading well below here. We have a little bit of a traffic zone where we are, where we bounced from this morning as well. Call it 131.25 to 25.55 is a bit of a zone here, I would say. But keep an eye on this trend line here. I know we've broken already below, but if we get a renewed break below, it's around 130.90, 131 the figure, then we are going to probably see it lower. And we are getting ever closer to the handover between Kuroda and Ueda. And if we listen to what the ex-BOJers are saying, we may be in for a little more speculation on what Ueda wants to do. And we are going to have to monitor closely to what the man is telling us, right? To make up our mind about the next decisions on monetary policy in Yenland, which will be utmost important. Euro yen. Now we are building a new top here, 144.5, 145.5, 145.5. Tried, failed, tried. Well, did the top. Retried, failed, retried close to it, and failed again. It's yen strength mostly. On risk off on especially antipodians got absolutely hammered on through the crosses. So there's quite a bit of yen strength in the coming into the system now. I think as well with risk having capped, yen is getting back on the risk train, as we already mentioned a couple of times. People were asking about the euro yen. Around 144 here. This is short term. I really think that for the medium term strength, it's again going to be decided in the 142.75, 143 if we get a test down there. For the others, yeah, keep an eye on it here. Keep an eye on what happens around 144.80 and then those prior highs. This is 250 point range. It's going fast, so I don't want to put a much tighter range on this one that I have to. There's other ones much clearer. I don't know if we have a clear picture on sterling yen. Sterling yen tried to even break the prior highs yesterday, and then saw a massive reversal when cable stopped, when risk got hit as well. Because I'll have a quick look at euro sterling as well to show you what happened once those yield numbers came out. So we had a reversal here. Keep an eye on what's happening at the 163.5. We are not that far away from it, but the bigger zone here is going to be in the low, let's call it 163 on sterling yen. If that holds already, then we may get back above. If that lets go, then there's, in my opinion, something bigger happening. And then we are going on this one. Quite a few people as well in the room, I think, are in this position. I tried it, then I let go, but then I went back into it. This Aussie yen. Aussie is really getting tattooed, and then if you get in surplus a bit yen, look at this. This has done already 200 points, and it is looking fragile. It's really looking fragile, not only because of the yen, but also what's happening in Aussie. There's a bit of a zone here where we are currently around, managed a little bit of the position, but I do think there is a possibility there's another 200 points coming here. I think that it's really possible, and that's going to be a big support zone here if ever we get down to 86 in Aussie yen. Aussie dollar did this fresh high, which was around a bit of a low here. Tried to break those prior spikes, 67.80, 67.80. Went a bit above. Had a bit of a rally in sympathy overnight with the RBNZ, but then the market woke up and said, like, well, no, there's a clear differential between the RBNZ and the RBA. The RBA is all mellow, and Aussie got absolutely hammered back through the break level here that we had around 67 40.50, and we're already back well below 67 and very close to support already. 67 66.70, 66 yeah, 66 65.70. Keep a close eye on that one for what's going to happen next. So Aussie is looking weak, and we're finding it back as well in the Aussie Kiwi. it was already on the weaker hand, but it was trying to make up its mind between 106 3 quarters, 107 3 quarters, and we had a bit of a yo-yo there. But then finally, overnight, it killed the beast, and we are now. That's a pretty decent move here, about 1.5%, and we are now on a support line since 2020. So pay close attention if you have Aussie Kiwi in position of what's going to happen 105.80, 105.65.80, and look at it. These are prior levels of interest as well. 105.65.80, yeah. Pin that in. That's probably going to be your level. We need to get back above 106.70.80 to get back into neutral territory. So these are the levels that that you're watching here. On this pair. Anything else you guys want to watch at before we close? Oh, I want to show the Norwegian kroner, because with all this oil getting higher, we had a retest here. Look at this 11.20 now on the euro NOK. How this is really getting to be one hell of a level here. And all of a sudden, it held yesterday, and we are already nearly 2% higher. It doesn't look like much on the chart, but it's a 2% move here. And it really rejected the underside of the channel. It dragged all the Norwegian crosses with it, of course. But there's something about the Scandies, and they are not only trading on oil for the Norwegian kroner or gas, but it's also a risk currency. Traditionally, if risk is doing well, Norwegian kroner is usually doing pretty well. We've seen the whole of, if you look at a wider one, we've seen the whole of 2022, the Norwegian kroner doing pretty well. When risk is doing less well, Scandinavian currencies are usually not doing too well. And let's not forget, we also have daily Norwegian kroner sales by the Norges Bank. By the way, Norwegian, as I say, Norway is closing pretty soon for Christmas. So Easter, sorry, Christmas, bit early for that. For Easter,
Christmas.
sorry. Yeah. So watch out for the spreads and the liquidity in the Norwegian kroner. And Stelios, did you want to look at something, Nick?
Don't have anything in particular. I can take the charts maybe tomorrow and show have an update of my
by all means
stuff. But really, after last night, you know, I want to let the markets kind of settle down, see what ATP brings, and then tomorrow I'm going to go through my charts with everybody. I think we've done well for today.
Absolutely. And by the way, just an early heads up, tomorrow will be the last flow show of the week. We are taking a break for Good Friday and Easter Monday, and we will then be back online on Tuesday. I don't think we already spoken about that, but so tomorrow is our last one for this week.
Yeah.
Last flow show.
Awesome.
Just before closing, I was saying about these dollar mix being very undecided and hanging around the lows. Yesterday, with risk getting a knock on the head, we are trying to get back above this level. It's possible that we are seeing, as Greg already showed as well, it's possible that we are seeing a bit of a retracement in this one. So reckon if risk continues to be on the defensive, reckon with a bit of MEX intermediate weakness as well. And I think, yeah, MEX on tap, yeah, that's that as well. And I think we are going to leave it there for today. So trade carefully on the ADP this afternoon. As we were saying, it's a big week for the US labor market. So be careful. Stay safe out there.
Trade carefully and tread carefully as well.
Yes. Thank you very much,
Thank you, Kay,
for your presence as usual. And we'll talk tomorrow again. Thank you.
Thank you, Kay. Thanks, everybody.